AM 560, The Answer.
Get the latest weather, traffic, and news updates online at 560theanswer.com. Now, from the Signature Bank Studios, this is Chicago's Morning Answer with Dan Proft and Amy Jacobson on AM 560, The Answer.
Top of the morning, Dan and Amy. July jobs numbers are out, and job growth slowed in July. Hooray, says Jay Powell, because it makes it easier for him to cut rates next month, right? For more on this and matters economic generally, as the R word is being bandied about again, the prospect of a recession.
Thought we're already in one.
It depends who you ask, I suppose. For more on this, James Perry, founder, CIO, Perry International Capital Partners, joins us. Jim, thanks for being with us. Appreciate it.
Good morning. Thank you.
Hey, it's great news. Jay Powell's finally getting what he wants, slow job growth.
That's exactly right. He's been talking pretty dovish for the last 3 months or 6 months. He's been wanting to cut rates. He hasn't been able to do it because inflation is still kind of running at 3%. And he's been talking about a more balanced labor market. And not only are we getting more balanced, it's beginning to really, really slow down fast. So the odds of a rate cut in September on the 18th are, 100%. So the market is looking at a slower economy, and the stock market doesn't seem to like it very much these last week or two. But the bond market's on fire. Bonds are rallying significantly. Long treasuries are at 380 today, down from 4.25.
What about that sell-off yesterday? What was that?
I think there's really a few top stories here, Dan, and I think it's all tied together. But, I did a podcast earlier in the week, and the big thing is that the political situation in this country, in Washington, is very chaotic. And there's a lot of money coming into this country from Europe, right?
Yeah.
Europe, Asia, Middle East. And those flows coming into this country are slowing down because people don't understand what American democracy is anymore. And I think if things settle down in Washington a little bit, I think the market will be a little bit less nervous, but it's kind of hard to see that happening before the election. So international flows into the country are slowing down. The market has gotten tremendously volatile. I read a piece this morning that said, when these companies are reporting these days, the average move in each individual stock, either up or down, depending on whether they outperform or underperform on their earnings, is 5% in a day, right? I mean, this is extraordinary volatility.
And some other sectors, we saw some this big lots. I mentioned this the other day when we were talking to investment banker from New York, Chris Whalen. Big Lots, a retailer, is a big retailer, is now on the verge of bankruptcy, and there's some suggestion that that's a canary in the coal mine. You've also seen commodity prices pull back. We had layoffs at John Deere. So what I mean, the prospect you say is slowing down, and we've sort of been in this stagflationary environment, even though a lot of people don't want to describe it as such. So what is all of this under the umbrella of slowing down portend?
Right. Well, I think that, if you really look at the big picture here, the U.S. economy has been in the same state since the pandemic. And the fact is that, in 2021 into 22, commodity prices went up and demand went up because the pandemic shut down, and tremendous amount of consumer demand for a lot of things. And since then, prices have been cut, costs have gone up so much that retailers have to cut costs to match Amazon, and they can't do it. It's all about cutting costs. So the retail part of the U.S. economy has been trading horribly for a year and a half. And the only sector that's really moving the economy now is this AI industrial revolution led by NVIDIA,
Right.
And it's a little scary because there's a good writer at the Wall Street Journal, a guy named Dan Gallagher, who I don't know but have spoken with. he said today it's NVIDIA's world and everybody else just lives in it, and that's the truth. It's a really concentrated sector. It's a very concentrated growth area, and it's a very concentrated performance area in the market. So the market's been trading kind of sluggishly here for about a year and a half, and all of a sudden you get a number like this today, and people kind of go, oh, gee, that recession word really is a big word,
And then so thinking about all this investment flow into AI, and if that is sustained, NVIDIA's world, and we all live in it, as you just said. So then, are we ever going to see a resurgence of IPOs that are signals of a dynamic, innovative economy? I mean, the IPO market. Am I missing it? I'm not an expert. The IPO market has been virtually dormant since the pandemic, hasn't it?
Yes, it has. It's a real structural change in the economy. And to highlight your point, Dan, which is a very good one, if you look at the sector of the economy or the markets called the Russell 2000, these are the smallest listed stocks out there. Something like 35 or 40% of them don't make money. That's why it's been underperforming for 3 years, right? And if you look at the Russell 2000, these companies that go public, companies don't need to go public anymore. That's the point. There's so much private equity money out there, and there's so much private debt money out there that companies can talk to a venture capital group anywhere, and if it's a good idea, they can get money from those guys. So the IPO market, I think, really has changed permanently, right? I really don't think IPOs are going to be anything like they were in the last technology cycle. I think it's over. I do think mergers and acquisitions will keep coming, but that's the purview of the big investment banks. Big companies buying each other for 5 and 10 and 15 and 20 and 30 billion bucks. That's going on. But IPOs, I think small companies have better alternatives than to list their stocks on an exchange.
Wow. Do you think that would be different though if Trump wins the election?
I don't think the IPO market changes much with Trump. I mean, I've heard a lot, Amy, about this Trump trade, and I'm not sure what that means. I think it probably means a lot of different things to a lot of people. But I think if you look at a Trump presidency and policy, there's very few things for sure. One of them is tariffs against China are going to go up for sure. There's going to be more security at the southern border, probably more sanctions against Russia and Iran on illicit oil trading with China, and probably deregulation in the oil business and several others. But beyond that, that's about all you know. So I think, and even that, Trump can change his mind, and he doesn't have to say much until he gets elected, if he does. And we don't know what the Democratic platform is going to be either. So I think that, again, a lot of the volatility in the stock market is because there's so much uncertainty about what government policy is going to look like in 9 months or something.
What is the status of those gathering clouds we had talked about for many months that never seem to have brought any rain? I'm talking about commercial real estate with the walk away from office space, retail space, and downtown areas where you have a lot of empty storefronts, and correspondingly sort of unrealized losses on the balance sheets of banks. Has that storm somehow passed?
That is a very good question. There was an article in Barron's yesterday, written by a fund manager in Switzerland who I know, and I can send you the article afterwards, but he was saying that he's really worried that the commercial real estate market is going to be the canary in the coal mine, and it's going to create a recession. He might be right. It's a very well-written article and research, but, the U.S. commercial real estate market is a $6.6 trillion market. And just to put that in perspective, U.S. real estate in the United States in total is worth $66 trillion, all right? Commercial is a tenth of that, right? $6 trillion. And half of that is owned by pensions and investment firms overseas. So the real exposure in the U.S. banking system for commercial real estate is $3 trillion. Now, if there's going to be a problem. You know, I've heard 500 billion and 400 billion. You know, if you just think about a $10 billion loan delinquency, which is what they're looking at right now, that's a pretty small number. You know, I mean, 10% of 3 trillion is 300 billion, and 10% of that is 30 billion. So, you know, I think the banking sector can manage that. I think there's a lot of things to be worried about, and I think, you know, if all of my commercial real estate developer friends and clients are going to get mad at me for saying this, but, you know, they have to walk away from some of these bad loans. The banks have to walk away with them, but the banks will restructure them, right? So I think it's going to take a lot longer to get to a stable level in commercial real estate, and it's certainly not coming now, and it's certainly not coming in the first year or so of the next presidency. But I don't believe that commercial real estate at the office level, anyway, is going to be what throws us into a recession. And I think retail is just adjusting from brick and mortar to fast delivery. So this, again, the economy is going through another layer of transformation, which people just have to get adjusted to.
What did you think about Trump's address at the Bitcoin conference, where he suggested openness, even sort of support for buying $70 million worth or $70 billion worth of Bitcoin as a strategic asset, as you know, for government's purposes?
Right. Donald Trump is a populist, and he knows that the government would like to have a central bank digital currency. And he doesn't like Stephen Gensler, who runs the SEC and used to run the CFTC, the Futures Exchange. And the government would like to see a cashless, electronic, central bank digital currency. And Trump, the main thing that he said down there, and he said a lot of things, but the main thing he said is there will never be a central bank digital currency under my presidency. And that's probably the biggest deal. Oh, and he said he'd fire Gensler, by the way.
Yeah,
so,
that's a good idea, too.
Right. But the other thing he said is that, you know, we would like to have a reserve of Bitcoin at the government level, just like we do gold. And that's an intriguing possibility. And I think the Bitcoin bulls loved it, right? I mean, Bitcoin was trading over 70,000 the other day. It's still 65. But the point is, I think that he's setting himself apart from the government as a what would you call it? I'm not a
well, so yeah, basically he's sort of the outsider that he's always positioned himself to be, right? It's like I get it. I get that you want to hedge against the federal government because you should want to hedge against the federal government because I don't trust it either.
Yeah, exactly. It's a populist stance. It's a good platform. It makes a lot of headlines, and he sets himself apart from a government that is big government, which, as you know, you and I have talked about this a lot, right? I mean, the Bitcoin investor really does have a libertarian streak in him, right? I don't trust the government. I don't trust the Fed. I don't trust the banking system, and I want to get my money. And I think Trump is just kind of tapping into that vein a little bit, and I think, you know, there is something to it. I think it's a different opinion than what is established in Washington.
All right, and before I let you go, you know, we always appreciate that you are transparent about where you're investing your money, sort of the distribution of your portfolio, and I think that's always instructive that you put your money where your mouth is. So what's your portfolio look like today? Any adjustments recently?
Yeah, that's a good question, and thanks for saying that. Yeah, I do believe that, you know, if you're going to be in the investment business and you're looking to grow your business, the best way to do it is through, you know, honesty and transparency. So I always say, if you know what I own, you know what I think, right? So my position in the portfolio has not changed that much in the last 3 months. It's about 50% cash equivalents, right? So T-bills at 535, 530, which is a good number on some money market stuff. And in the stock market, you know, it's 40% stocks, which is a little bit underweight. And I'm a little bit more of a conservative investor than maybe a lot of people. But within that, I've got energy, defense, and high tech. And I think that, you know, you have to have NVIDIA because, you know, again, you know, it's NVIDIA's world and everyone else is living in it. So I think that I've got some gold, I've got some big cap stocks, which I think I would like to buy more of if we get lower between now and the election, and I think we will. And I think you've got to just be a little bit patient and have some cash on hand and see if we can't pick up some of these great stocks at cheaper levels, in the weeks and months ahead.
All right, that should be instructive for Amy, who has all her money tied up in Chicago real estate and goldfish. So she needs to make some adjustments. Jim Perry, founder, CIO, Perry International Capital Partners. James, thanks as always.
Thanks, Dan. Thank you. Thanks, Amy. Have a good weekend.
You too, and he joined us on our turnkey.pro answer line.
It's what Chicago is talking about. It's Chicago's Morning Answer with Dan and Amy on AM 560. The Answer.